Have you ever wondered how some people manage to invest safely without being financial geniuses? Or how is it that they effortlessly own hundreds of companies without spending all day researching? So here's the secret. They're using something called ETFs, right? And today I'm going to try explaining exactly what an ETF is, how it can help you in your wealth creation journey, and in the simplest possible terms so you can confidently grow your money even if you know absolutely nothing about investing, right? So first off, ETF stands for an exchange traded fund. Now don't let that phrase scare you, but here's what it all means. Think of an ETF as a basket that is filled with different fruit. Instead of buying apples, bananas, and oranges separately, you simply grab the whole basket and instantly own a variety of fruits without having to choose each one. In investing terms, this basket holds many different stocks or bonds. Instead of buying one company's stock like Apple or Amazon, you buy the whole basket and you own a tiny part of dozens of companies or sometimes even hundreds of companies all at once, right? That's an ETF. It's pretty simple. Now, why is it that people love ETFs? So what does an ETF have in it that gets so many investors together in order to invest in that product? There are three big reasons that I believe is why beginners, even experienced investors, like ETFs. One of it is easy diversification. Put it in simple terms, you don't have to do a lot of research in 100 companies in order to find whether you should invest in one or 100. You can just buy an ETF that invests in a particular sector, right? So in that case, your investment is spread out, so you don't have to put all your eggs in one basket. It's got a very, very low cost. ETFs usually charge very small fees compared to traditional mutual funds. Low fees means more money stays in your pocket. And I think the third and most important one would be stress free investing. You don't have to constantly watch markets or predict individual stock movements. ETFs follow a big group of companies, making investing simple and stress free. So, more importantly, what you guys, all of you all are here for is how can ETFs actually make you money, right? Great. So, how exactly does this basket of investments make you richer? In two simple ways. First one is growth. As the overall economy or a certain sector in the economy grows, your ETF's value goes up and your investments grow with it. Second is dividends. Some companies share profits with investors, and that's called dividends. Some ETFs collect these dividends and pay them directly to you. It's like receiving extra money regularly just for holding the ETF. So let's say you bought an ETF basket holding top American companies 10 years ago. Without picking stocks or reading financial reports, your money would have grown significantly over time, simply because these companies collectively performed well. So let me give you a few examples. And this is for everyone from a beginner to an experienced investor, right? Let's look at two simple examples that you can start with immediately. Let's take the US stock market ETFs, right? These ETFs let you own a small piece of many big companies. So you can own Amazon, Google, Nike, and hundreds more all at once with just one investment. It's called the triple Q. It's basically something that looks at how the NASDAQ does and follows that in a return fashion. So you have returns of that particular ETF that continue doing well as these companies within that ETF continue doing well. The second easy example of an ETF is a dividend ETF. If you like the idea of receiving regular payouts, dividend ETFs are designed specifically to hold companies that pay dividends. Think of it as receiving passive income or extra pocket money simply for investing. Some form of a rent that you get while it's like holding real estate and you get a rental check every month. It's the same thing with dividends that you get from a dividend ETF. You own a company like Procter and Gamble, Johnson and Johnson. These companies tend to pay out dividends every quarter and sometimes every year. The money that comes from their profits comes to you as a dividend, and the ETF puts all of these companies' dividends together and sends a check to you. That could be every month, it could be every quarter, it could be every year, but irrespective, if that's what you're looking for, dividend ETFs are perfect for you. Some of the common mistakes that a lot of people make in ETF investing and how you can avoid them is chasing trends. So don't invest in anything that is a trendy ETF just because everyone else says so. Choose ETFs that hold large, stable companies, especially when you're starting out. And do not forget to look into the fee structure. Never ignore fees in an ETF. Always check your ETF's expense ratio. This is a small fee that the ETFs charge. A lower expense ratio means more of your money stays with you over time. If you avoid these two common traps, you're already ahead than most new investors. Now, how do you get started with ETFs? You can open a brokerage account. Just go ahead, open with Fidelity, Robinhood, Vanguard, or any of your local brokerage accounts in your country from wherever you're listening to. Select an ETF, start with a broad market ETF, look at the banking ETF, look at the technology ETF, one that covers many companies, and invest in those. And invest small amounts. You don't need to go in a lump sum way of putting all your money on day one, right? Even if you start with 50 or $100 a month, it adds up significantly over time thanks to the magic of compound. The beauty of ETFs is that you don't have to become an investing expert to start growing your wealth. So here's your original question answered clearly. What exactly is an ETF, and can a beginner like genuinely grow your money using ETFs? The answer is an emphatic yes. ETFs are the simplest way to invest confidently, even as a total beginner. Remember, the best investors aren't geniuses. They're just consistent, patient, and smart enough to let ETFs do the heavy lifting. Did this clear up ETFs for you? If it surely helped, please hit the like button and subscribe. Tell me what investing question you would like me to simplify next. Thank you so much.